One more time, welcome to Invest. We're talking about investing, finance, and professional development. For today's items only, the investment I'm going to talk today will be Ethereum ETH. First, I want to say happy Wednesday, everybody. Hope you're a great week so far. With respect to recording time of 9:21 a.m. on the Eastern Time, Ethereum can trade $3,537, up about 1.46% so far. With respect to the overall crypto market, it seems like on the stable coin side of the house is relatively surgy this morning, with Bitcoin leading the effort about close to about 6% so far, while Ethereum on the second place up about 1.42% so far. So with respect to the news front, there's been a lot of positive news that's been percolating, I would say, in the last 12 hours so far, and I've been keeping tabs. So the first one coming out from Market Watch 32 minutes ago talk about Bank of America with respect to the equity research arm identifies that JP Morgan, Morgan Stanley, PayPal, and Walt Disney as digital assets exposed companies. So it seems like with respect to their current corporate balance sheets, they are currently holding some crypto assets, in their financial statements at the moment, which is interesting. And also at the same time, Bank of America gave them these 20 identified list of companies as a buy rating as well. So not sure if this has anything to do with crypto specifically, but the buy rating is more of a encapsulation of the overall business model, the value proposition, and the defensibility of the competitive advantage of these 20 companies, and that's the reason why Bank of America is rating them as a buy rating. But the crypto side is more of just supplementary part of the support thesis, if you may. Right. So with respect to the next one, come out from CoinDesk 2 hours ago, talk about how will the Ethereum ecosystem react to fee burning. So this is basically talking about with respect to the burn rate that we've been experiencing ever since the 2.0 for Ethereum, ever since the London fork. And with respect to the fees, the gas fees that we've been obviously, as one of the key problems that we've been trying to fix, right? And basically the article is talking about what will be the future progressions that we should be foreseeing going forward, what some of the pain points that we're currently experiencing right now, and what is the price predictions as well in this article. So it's quite interesting, but again, a speculative article with their point of view, which is something we have to be mindful of. But it's interesting if you want to read it. And then next one, talk about Bazinga, talk about Jim Cramer, which is the CNBC commentator, if you may. He's also a host on Mad Money Lightning Round. He said that he really likes a couple of different stocks, including like Bank of America, JP Morgan, and specifically Ethereum, despite it's not even an equity. But he did say that he loves the value proposition of Ethereum. He's been buying quite a lot as well. Ultimately, he works for a major corporation, right, CNBC, and with respect to the ties to a lot of the big whales or institutions, can we take what he's saying seriously? So is like Mark Cuban, based on his verbiage, in the recent time, right? I think like 48 hours ago, he did speak on Fox News or Fox Business about his bullish, sentiment around Bitcoin and secondarily on Ethereum as well. So next one's talk about Bazinga again. 11 hours ago, Bitcoin, Ethereum, Dogecoin on a bull run as SEC confirms that it has no China-like plans to ban crypto. So this is something we have heard already, but seems like Gary Gensler from the SEC is also giving the stamp of approval that we have no intentions of banning crypto. So is the comparable verbiage that we heard from Jerome Powell on last Thursday, if you may, right? So something we appreciate. I think this is more of a psychological effect on driving the buying pressure and subsequently cause some sort of a rally, because these are relatively influential members in the financial system and the regulatory system as well. Subsequently drive some support on continuing the rally, which is frankly relatively short-lived, which we'll dive into a little bit later on the technical front. And then the next one, this is something we've already talked about. This is the Altair upgrade set to activate on the Ethereum mainnets this month. So this is a confirmatory date. So with that, we have some anticipatory pressure knowing the fact that we have a specific dates now. So ahead of the activation dates, people are gonna obviously be, hedging against by buying on, the current level right now to hedge until basically like buy the rumor, sell the news type of affectation until the official activation dates, right? So that's pretty much it on the news front. Let's talk about the technical specifically. So with respect to Ethereum right now, we are at the scale of 60 out of 70, so relatively overbought. At the level we at right now, we are basically hovering, being dragged by Bitcoin, obviously. And also with respect to the media affectation as well. So next level, technically, we should be getting to the 3,845 or the 3,850. And I think we should technically get there. And by then, we'll be extremely overbought at the 70 scale of 70. Which we have to look out for, right? And I think we might kind of consolidate a little bit at the 3,650 first, 3,650 first, just as the first level to test the water a little bit. If the bullishness continues, being dragged by obviously, the media affectation and Bitcoin, we have a likelihood of getting up there, and there's no signs of curvature to go down yet. So I think the bullishness is still sustaining, based on obviously the momentum that we're experiencing right now. So Bitcoin, we are surging right now. We're basically mooning. The risk is definitely very high. We are way above overbought right now with the 72 out of 70 right now. So the risk is definitely increasing and dramatically. And whatever goes up really, really fast comes down just as fast. And I think, the dip again, right, was the $43,000 or the 40 and the 37. We consolidate a bunch of times. And right now, what would be the next level for us to get up to? Right now, this is a relatively good consolidation zone, the 54,500. But the real level that we should technically leap up to would be somewhere around like the 58,500, and ideally get to the 60,000 from here. However, I think this will be relatively short-lived because of the fact that we're already overbought, and as we get there, as we get even more overbought, right? And you could see that we sold off relatively sharply early this morning as we hit that 55,500, and because we were extremely overbought at that level, right? So we have to watch. I think the risk is definitely very high right now. We're extremely overbought on all levels. The technical is extremely stretched up. So I think the next, couple foreshadow play would be we potentially might get up to close to, like, I think the max would be 60,000 or 50 per our technical analysis, right? Let's take a look at it again, right? Would be the 58, right? That would be the highest that we could potentially get to. I don't think we'll actually breach through to get above to the 60. And then we'll reverse back down. And I think the bloodiness should be relatively sharp because of the fact of how sharp we have raised so far. This took us how many days? Like a couple of days, right? Ever since the 1st of October as we got the confirmation from Jerome Powell. And then just subsequently a positive news, right? September has always been a negative month, and that's why we saw that sell-off from there. But October is kind of like the opposite side of the spectrum, almost like nothing have happened or something like that. I completely forgot about what happened in September now, right? So this is definitely something fishy going on. Definitely some sector rotations going on as well. At the same time, with respect to the inflationary pressure that we're pending from Jerome Powell from November in the near future. It seems like there are still some black swan events that we should technically be expecting going forward that could subsequently sell us back down. So do not be FOMOing in. Definitely watch your risk tolerance and try to mitigate your risk by dollar cost averaging wisely. This is not a good level to buy at right now. So be mindful of what you're doing. So Dogecoin, we are, that's 62 out of 70 right now. So we're very, very overbought. Less overbought than Bitcoin, obviously, but more overbought than Ethereum. And I think the next level which we got to was to the 26, right, which we got to earlier. And if we continue the bullishness, which we still have some room to go up to, would technically be the 30, and then that should be it on the peak, right? And with respect to the curvature, we're still bullish, so there's no signs of reversing yet. But risk is definitely increasing because we're overbought in all levels at the moment. Cardano, we still have some room to run up to. We still at the 47, so it seems like it's a lag with delay effects that's going on right now. We just formed a golden cross. So I think Cardano out of all would be the best ideal levels to buy at right now. But again, right, we got to the 210 early today. But the real level is really the $2, 187. The current level is okay, but it's not the best level to buy at, right? Solana we're selling off right now because of the fact that we were running really hot, right? We were at the 180 earlier, and then as we got there, the reason we got there is because we had that golden cross just form, right? But you could see that it's relatively short-lived, right? It seems like we are forming like an early inning of the head and shoulder pattern, but we're like forming a head, but like we haven't formed another additional shoulder yet, so we have to watch this. It seems like this Solana is in a different market cycle in comparison to the other ones. So Solana seems like it's doing its own thing in comparison to the other ones, so definitely be mindful. And I think right now would not be the most opportune time. Again, right? The best levels to buy it would be the 115, the 97, or the 66 per the technicals. XRP, we got to the 110 earlier, and seems like we are selling off. Right now we're at the 54, so we're not like crazy overbought or crazy oversold. We are still sustaining that bullishness. So I think technically we could potentially get up to the 110 again and then bounce back down again as we reach that 65 or 70 mark. For polkadot, we are, it's a relatively funky chart, I would say. We been trying to basically struggling. We're still in the head and shoulder pattern. It's very prominent. The drag is basically coming from the other coins on the house that is driving some buying pressure. So right now it's an okay level, but not the best level. The real level that you want to buy at was at the 25, right, which we got to. And that's basically a substantive platform to dollar cost average at. So right now I would probably hold off. The golden cross has formed, but it's relatively merged together. So that means the momentum will be relatively low. So the sell-off is actually more likely than the surge coming. So I would be very cautious about buying polkadots at the moment right now. And with respect to the market cycles, I know it doesn't look obvious, but if you look at the macro picture, we should technically be in the anger and the early inning of depression stage. And despite the surge that we're seeing right now, the surge is relatively artificial. Ever since basically the transition from September to October, from Q3 to Q4, all the news has been just very positive, right? A lot of media companies has been pumping it. So how do we stay within the frame of reference for risk mitigate would be at the level of identifications that we have talked about so far, right? For Ethereum, despite it surging right now, just look out for the better levels at the 3,150, 2,750, 2,450. The next 12 months, if you bought in currently, just buy it if you want and hold for a long term. It's an okay level. It's not the best level, right? We are overbought ultimately on the daily perspective on a technical front. So something to be mindful of. I hope that you guys are making the right logical decisions for yourself. There's no like expiration dates for when to invest, right? It's all about how you risk mitigate, how you dollar cost averaging wisely and logically. So hopefully this is helpful. Really appreciate you for dropping by on this Wednesday morning or Wednesday night, depending on where you are. Feel free to give me any questions if you have any ones, and stay tuned for us to come up. Take care. Bye.